Hello and welcome to the free sample tax course. I am your instructor, April Gutierrez. Before we begin with today's lecture, I just wanted to orient you with a couple of items inside our learning management system to ensure that you are actually ready to get the full benefits of participating in today's class. In order to be watching this video, you obviously had to find the lecture video tab and then click on the play button underneath this video tab. But prior to watching the video, we do ask you to prepare for class. And the first thing you do to prepare for class is to go to the Course Manuals tab, look to the folder at the bottom of the page, click on the folder to open it, and then click on the documents contained inside. One of the documents contained inside is the student manual. Student manuals are loaded as Adobe PDF files. Adobe PDF is a free software that you can download off the internet. You can open the manual and read it on your computer screen. However, most students do prefer to print the manuals, and you can see there's a print button here that's in the upper left-hand corner. You just click print to send it to your local printer, and then you can have that handy while I'm teaching today's class. Also included in this tab is a free sample course quiz. A copy of this quiz is located underneath the test tab. It's an electronic copy. But if you are a person who prefers to have paper tests that you can read the test questions and circle the answers, if that's what you want, there is a copy here that you can print as well. After you've printed your student manual, please go to the Forms and Publications tab. Underneath the Forms and Publications tab, the owl is pointing at the two forms you need to use for classwork today, and also the same two forms, Form 1040 and Form 8863, that you will need in completing today's homework assignment. Forms are located inside the file drawer at the bottom of the screen. You click on the Form folder to open IRS Forms and the Publication folder to open IRS Publications. Inside the form folder, you will see that forms are listed in numerical order. Simply click on the form to open it and then send it to your printer. Now this course, like most of our courses, includes a reading assignment. The reading assignment includes chapters from either Pub 17 or one of the other publications shown here for most of our courses. And 970 Tax Benefits for Education is the IRS publication that goes with today's program. So if you wanted to print that manual or at least read it on your computer screen, that's where you go. Next is the lecture video tab. Obviously you found the lecture if you're watching me talk right now. Then we have the test tab. And throughout today's class, we are going to be breaking to do some tests. One of them is a classwork assignment, one of them is a quiz, and after class is over today, you're going to return and take a password test as well as a homework test. And this is where you go to find those tests. So I'll show you more about those later. Underneath the Answer Keys tab are answer keys for today's work assignments. There are answer keys for classwork, homework, and quiz. And during today's class, I will be giving you passwords that unlock the classwork assignment, and I will be giving you passwords that unlock the quiz answer key. However, the homework answer key, I will not give you the password for that. It's your job to finish this course independently, and once you have finished the course independently, you will be able to print a certificate of completion. And the certificate of completion will have that final password printed on it, and you can then use that password to unlock the homework answer key. There is a Q&A forum for this course, as we have with all of our interactive online courses. If you have any questions about the content of today's course, you can use the Q&A forum to post a question. If you are having any technical difficulties with accessing the LMS, or any of our course content contained in the LMS, please post a help ticket from underneath the Help tab. So that ends the introductory part of today's class. Let's move on to the lecture itself. In today's lecture, we are going to discuss education credits, including the American Opportunity Credit and the Lifetime Learning Credit. As I already said, IRS Publication 970 covers tax benefits of higher education, and that can be relevant and important reading work for you if you care to learn more about education credits. By the end of today's session, you should know the difference between a refundable and a non-refundable credit, the rules for claiming education credits, and how to complete IRS Form 8863. Now, tax credits appear fairly far down on the 1040 tax form. I have a 1040 tax form here that I'm referring to on the screen, and you can see that the 1040 form is a 2-page long form. As I scroll down the form, we don't get to tax credits until we're on page 2, line 47. So really, there's a whole lot of information you need to know about tax return preparation to even get to the point where we're figuring a tax credit to enter on lines 47 through line 54. And that would be impossible to cover in just a short class that we have today. But I am going to give you some basics about individual tax preparation to put you on the right foot. And we're going to begin with a discussion of the difference between a refundable and a non-refundable credit. A tax credit allows you to subtract a dollar-for-dollar amount off of your calculated income tax. A deduction, by comparison, allows you to reduce your taxable income. How much tax you save because of a deduction varies according to what tax bracket you are in and whether you have taxable income. A $1,000 deduction would save you $150 if you are in the 15% tax bracket, or $280 if you're in the 28% tax bracket. So what that's saying is the higher your level of income, the more money a deduction can save you. By comparison, a credit is always dollar for dollar. So regardless of what your tax is, a $500 credit is going to reduce your tax by $500. It doesn't matter whether you made $1 million or just $2. Credits can work for you on a dollar-for-dollar basis. But most federal credits are non-refundable, and this means they can reduce your tax to zero, but do not generally create cash back. So tax credits can be limited by your income. There's two reasons they can be limited by your income. One is maybe you don't earn enough money to pay tax, so there's no tax to claim a credit against. The other is that maybe your income's so high you fall out of the area or the threshold ranges where the credit is allowed. Here is an illustration of how the tax credit or a tax credit can be limited by the amount of tax you owe on your return. If your tax liability for the year was $600 and you had a $500 tax credit, then your net tax would be $100. 600 minus 500 leaves you with $100 of tax. So the non-refundable credit benefits you in full because you save $500 of tax and reduce your tax down to only $100. On the other hand, if your tax was $400 and your credit was $500, your allowable credit would be $400. Your tax is reduced by $400, but the remaining $100 of credit is lost and is not used because the credit cannot be more than your tax. So with a refundable credit, any remaining credit does get refunded to you, and that means you benefit from the credit in full regardless of how much tax you pay. Now, with certain exceptions such as the foreign tax credit, the credit for prior year minimum tax, and the adoption credit, most federal tax credits have to be claimed in the current year and cannot be carried forward. The important difference between refundable versus non-refundable credits is where each appears on page 2 of Form 1040. Non-refundable credits are taken as subtractions from your income tax on Form 1040, lines 47 through 53. So I'm just pulling over to the 1040 here. You can see line 47 is where we start to take credits, beginning with the foreign tax credit. We claim them all the way through line 53 and then total them up on line 54. Line 54 can never be more than line 46. So this is where it's possible in limited situations where you might have credits that are greater than your tax that you could then carry forward the unused credit to the next year. But in most situations, if the credits are more than the tax, then the credit that is not used is lost. Let's compare that with refundable credits that are recorded under the payments section of Form 1040. With refundable credits, it really doesn't matter what your tax is. You benefit from them in full. Refundable credits are claimed on lines 63 through 71 of the Form 1040, and they are treated the same way that income tax withholdings and estimated tax payments are paid. You have the ability to apply those to any tax debt you have, and if they are in excess of your tax, then you get to have them refunded. So to help illustrate how refundable credits work and how non-refundable credits work, I'm going to take you over to our tax software program that we actually use in our tax service preparing tax returns professionally. And I've just done up a simple tax return. And I've created a tax return here for a filer named Test Credit. Test is a single filer with no dependents. And I've given Test $15,000 of income. Very simple. The only source of income is wages. It's entered on the form. We go over to page 2, and again the $15,000 of income carries to line 38, and now we give Test a standard deduction. The standard deduction for a single filer is $5,700, and if you are married filing a joint return, you would take that number and double it, making your standard deduction $11,400. The test is single, so we enter $5,700 on line 40. We then do a math subtraction and put $9,300 on line 41. Next, we see that there is an exemption deduction, and each person in the United States who's living and breathing essentially has $3,650 attached to them. And if that person is filing a return and claiming their own exemption, they'll claim that deduction for themselves. If you have a person you are claiming as a dependent, you will get to take a deduction for the $3,650 associated with them. That's what it means when we say we're claiming a dependent. Claiming a dependent means you get to claim their exemption deduction. But Test has no dependents, so Test will claim an exemption only for himself in the amount of $3,650. We do another math subtraction and end up with $5,650 of taxable income. At this point, we move over to the IRS tax tables. You can find tax tables at the end of Publication 17, and maybe I'll just take you and show you how to do that. So I've returned to the Learning Management System. I'm going to the IRS Forms and Publications folder. I'm going to go to the IRS Publications folder, and then I'm going to click on Pub 17. So IRS tax tables are located in Pub 17. They begin on page 254, and they begin at the very lowest rate of zero tax on zero amount of taxable income. You can see that there's columns that vary according to your filing status. So Test filing status is single, and to find Test's tax, we have to move down the single column until we get to a point where we have $5,650 of taxable income. I can see that that tax for $5,650 of income is $568. I now take that tax and enter it on the Form 1040, and you can see it goes on line 44, $568. So this is an important number, our tax. The tax that we have here is going to limit the amount of tax credit we can claim here. And I decided to give Test an education credit. Test had $5,000 of qualifying education expenses during the year that are qualifying him for the Lifetime Learning Credit. We've entered $5,000 on the Lifetime Learning Credit line of the form and multiplied that by 20% to come up with his allowable credit, which is $1,000. But we're going to see here that Test is unable to benefit in full from that $1,000 credit because his tax is only $568. So we enter $568 on line 46 as tax. His credit cannot be more than that. His total credit is therefore $568, and he has net income tax of $0. Now over here on line 63 is an illustration of a refundable credit. A refundable credit is a credit that you benefit from even though you never paid money in, and it will not be reduced because your tax up here goes to $0. So we can see that even though Test had zero tax, paid no money into the system, he's going to be eligible to claim a Making Work Pay credit in the amount of $400. That $400 credit appears on line 63. It carries down to line 72 as withholding and gets refunded to him in full. Now let's see what happens if I bump up Test's income a little. So I've decided to give Test $20,000 of income rather than $15,000 of income. And let's see how things change. We move over to page 2 of the 1040. We can see that Test had $20,000 of income and the same $5,700 standard deduction. But this time around, his net taxable income is higher. He ends up with taxable income of $10,650. If we were to go to Pub 17 and look up the tax on $10,650, we would find that Test's tax bill has gone up to $1,183. Well, now that $1,000 education credit can benefit Test in full. The credit was calculated as $1,000, and the $1,000 is allowed in full because it is equal to or less than the tax on line 46. So we enter the credit on line 49. The credit is less than the tax, so the credit is allowed in full on line 54. We then subtract the credit from the tax, and we get net tax of $183. But Test does have a $183 tax liability, and if he didn't pay any money in, he'd actually owe that money. So let's see what happened. Well, Test did not have any income tax withheld from his pay, but he is eligible for a Making Work Pay credit. The Making Work Pay credit is a refundable credit, and you can see that whether he had tax or not, this credit has not changed. It's still $400, but this time it's going to be used to pay his $183 tax bill, and he's left with a refund of $217. So let's take a look at the Form 1040 a little bit more closely. We're looking at the front of the Form 1040 here, and we will see that the top portion of the Form 1040 is used to provide name and address and Social Security number information for the filer or filers of the tax return if it's a joint return. Next, we have filing status. Filing status is very important because filing status affects which column you use to select tax in the Pub 17 tax tables. It also affects your ability to claim certain tax credits. It affects your standard deduction and many other things as well. Under the next section is the exemption section. Remember I told you that every person in the United States has $3,650 stamped on their forehead? Well, this is where we tell the IRS how many people you're claiming $3,650 for. So exemptions are important because you get to claim an exemption for yourself as well as any dependents you claim on your tax return. Each exemption that you claim gives you a tax deduction of $3,650. The only exception to this rule is if you are the dependent of another filer. If you are the dependent of another filer, then you do not get to claim an exemption for yourself, and that means your exemption deduction would be 0. Lines 7 through 21 are used to report income, and the type of income that you have and the amount of income that you have can affect your ability to claim tax credits. How your tax credit is affected would depend on the amount of income you have, the type of income you have, and the specific credit that you're looking at. Every credit has its own rules, and today we're looking specifically at the education credits. The next part of Form 1040 is where we enter adjusted gross income. And we are allowed to reduce our adjusted gross income by certain deduction items that are claimed on lines 23 through 36. And adjustment items can also affect your ability to claim tax credits and the amount of credit you might be entitled to. In particular, with respect to today's class, one of the adjustment items that you should be aware of is the tuition and fees deduction, because if you claim this deduction, your ability to claim an education credit may be limited. An income amount referred to as your adjusted gross income appears on line 37. Adjusted gross income carries from line 37 and is entered on line 38 on page 2 of the Form 1040. Next, we go and figure your standard deduction amount, and the standard deduction amount for a single person is $5,700. If you are filing a joint return, you take that number and double it. That would give you $11,400. Exemption deductions are entered on line 42, and you can see that we take $3,650 and multiply that by the number of exemptions listed on page 1 of the Form 1040. So if we have in the exemption section that we've checked the box for ourselves and we've listed one dependent here, then we would say we have 2 exemption deductions that we're eligible for. And on page 2 of the Form 1040, we would take $3,650, multiply that by 2, and enter the total on line 42. If we have only one exemption deduction, then we would enter $3,650 on line 42. Once we have finished figuring our deductions, we arrive at a number called our taxable income. Taxable income is shown on line 43 of the Form 1040. And whatever amount we enter on line 43, we're going to use that number to figure our income tax. To figure our income tax, we need to go to Pub 17, look up our taxable income in Pub 17, and then enter the tax on line 43. We also have a tax called the alternative minimum tax, but I am not teaching you about that particular tax today. Most people do not pay alternative minimum tax, and therefore line 46 is usually the same number as line 44. The credits that are available are all listed on lines 47 through 53, but we are going to be looking at only one of those credits today, and that is the education credit reported on line 49. Refundable credits are shown on lines 63 through 71, and we are going to be looking today at the credit claimed on line 66, which is the American Opportunity Credit. And let's move on with today's class. Education credits. For 2009 through 2012, there are 2 tax credits available to help offset the costs of higher education. These credits are the American Opportunity Credit and the Lifetime Learning Credit. There are AGI phase-outs you should be aware of, and remember I told you that there is a term you should know, which is adjusted gross income. The abbreviation for adjusted gross income is AGI. Your ability to claim credits is affected by your income. Phase-outs for the credits are as follows. The American Opportunity Credit phases out when your income hits $80,000, and you are not allowed to claim the credit at all when your income hits $90,000. If you are married filing a joint return, you can take those amounts and double them. The phase-out range would then be $160,000 to $180,000 for joint filers. The Lifetime Learning Credit has a lower phase-out, just $50,000 to $60,000 for a single filer, and $100,000 to $120,000 for joint filers. The first credit we're going to take an in-depth look at is the American Opportunity Credit. The American Opportunity Credit provides tax benefits in the following ways. Firstly, a maximum credit of $2,500 per eligible student per year is allowed. That means that if you have more than one student, you could claim more than $2,500. A modified rate of 100% of the first $2,000 of credit is allowed, and 25% of the next $2,000 of expenses is allowed. So what that means is if you have $2,000 of education expenses, you would be able to claim a credit of $2,000. If you had $3,000 of education expenses, you would claim $2,000. You would claim 100% of the first $2,000 and 25% of the second $1,000, and that would give you a credit of $2,250. Also, 40% of the credit may be refundable. It applies to all 4 years of a college degree program, and qualified expenses can include course materials. The credit can be claimed by a non-dependent taxpayer student, a dependent student whose parents do not claim his exemption on their return, or a parent of a qualifying student. Now, who can claim the American Opportunity Credit? Well, generally you can claim the American Opportunity Credit if all 3 of the following requirements are met. Number 1, you pay qualified expenses of higher education, and you pay the education expenses for an eligible student, and the eligible student is yourself, your spouse, or a dependent for whom you can claim an exemption on your tax return. Please note that qualified expenses paid by a dependent for which you can claim an exemption or by a third party for that dependent are considered to have been paid by you. So what this is saying, for example, is let's just suppose your child's grandmother paid his college expenses for him. Even though you did not pay the college expenses yourself, you're going to be able to claim the education credit for your child so long as you claim your child as a dependent on your tax return. On the other hand, if your child is not your dependent, or you choose not to claim your child as a dependent on your tax return, and your child files his own tax return, then he would claim an education credit for himself, even if grandma is the one that paid the expenses. Now, who cannot claim the American Opportunity Credit? You cannot claim the American Opportunity Credit for 2010 if any of the following apply. Your filing status is married filing separately. You are listed as a dependent on the exemption section of another person's tax return. Your modified adjusted gross income is $90,000 or more, or $180,000 or more in the case of a joint return. You or your spouse were a non-resident alien for any part of 2010, and the non-resident alien did not elect to be treated as a resident alien for tax purposes. Or you claimed the Lifetime Learning Credit or a tuition and fees deduction for the same student during 2010. So who is a qualifying student for the American Opportunity Credit? To claim the American Opportunity Credit, the student for whom you pay qualified education expenses must be an eligible student. This is a student who meets all of the following requirements. The student did not have expenses that were used to figure an American Opportunity Credit in any 4 earlier years, including any tax years in which you claim the HOPE credit for that same student. So the HOPE credit has actually been replaced by the American Opportunity Credit. Prior to 2009, there was no American Opportunity Credit, and instead we had the HOPE credit. And it is possible, for example, that you might have a student who claimed the HOPE credit, or for whom education expenses were used to claim the HOPE credit in, say, 2007 and 2008. And then in 2009, the American Opportunity Credit was claimed for that same student. Well, for purposes of the American Opportunity Credit, that would mean that the American Opportunity Credit has actually been claimed for 3 years, and that means that 2010 would be the final year that you could claim the American Opportunity Credit for that student. Also, the student must not have completed the first 4 years of post-secondary education. This essentially means that the student cannot already have a bachelor's degree. So if you have a student who has already achieved a bachelor's degree, it doesn't really matter what what kind of bachelor's degree it is. It matters that they have one. And if they have one, then they're not generally eligible to claim the American Opportunity Credit. Also, for at least one academic period during 2010, the student must have been enrolled at least half-time in a program that leads to a degree, certificate, or other recognized educational credential, and the student must not have been convicted of any federal or state felony for possessing or distributing a controlled substance as of the end of 2010. So here is an overview. This particular table has been inserted into our manual as a copy of Table 2.1 from Publication 970. It does a really good job of kind of wrapping up the key points that you need to know about the American Opportunity Credit. Firstly, that the maximum credit is $2,500 per eligible student. The limit for AGI is $180,000 for a married couple, $90,000 if you are single. Is the credit refundable or non-refundable? Well, 40% of the credit is refundable or may be refundable, and the rest is not. Number of years of post-secondary education. You can claim this credit only for the first 4 years of post-secondary education. The number of tax years the credit is available. It is available only for 4 tax years per eligible student, including any year that student was used to claim the HOPE credit. Type of degree required. The student must be pursuing an undergraduate degree or other recognized educational credential. Number of courses. The student must be enrolled at least half-time for at least one academic period that begins during the tax year. Felony drug conviction. No felony drug convictions are allowed on the student's records. Qualifying expenses. Tuition and fees required for enrollment, including course-related books, supplies, and equipment. And these supplies do not need to be purchased directly from the institution in order to qualify. Payments for academic periods. Payments made in 2010 for academic periods beginning in 2010 and in the first 3 months of 2011 qualify. So that's the summary of the American Opportunity Credit. Let's compare it with the Lifetime Learning Credit. The Lifetime Learning Credit is an easier credit to qualify for in most respects, except the part when we get to income. The income threshold or phase out for the Lifetime Learning Credit is considerably lower than it is for the American Opportunity Credit. But if you get past that income restriction, the Lifetime Learning Credit itself is available to a greater number of filers, and let's see why. The Lifetime Learning Credit helps parents and students pay for post-secondary education with fewer restrictions. And for the tax year, you may be able to claim a Lifetime Learning Credit of up to $2,000 for qualified education expenses paid for all eligible students enrolled in eligible educational institutions. The benefits of the Lifetime Learning Credit? Well, there is no limit on the number of years that the Lifetime Learning Credit can be claimed for each student. However, a taxpayer cannot claim the American Opportunity Credit and the Lifetime Learning Credit for the same student in 1 year. Thus, the Lifetime Learning Credit may be particularly helpful to graduate students, that is, people who already have their bachelor's degree and perhaps are working towards a master's program or are taking some additional education programs outside of a degree program. Those students who are taking only one course and are not enrolled in a degree program, and those who are not pursuing a degree at all. So who can claim the Lifetime Learning Credit? Generally, you can claim the Lifetime Learning Credit if all 3 of the following requirements are met. You paid the qualified education expenses for higher education. You paid the education expenses for an eligible student, and the eligible student is yourself, your spouse, or a dependent for whom you claim an exemption on your tax return. If you are eligible to claim the Lifetime Learning Credit and you are also eligible to claim the American Opportunity Credit for the same student in the same year, you can choose to claim either credit but not both. If you paid qualified education expenses for more than one student in the same year, you can choose to take the credit on a per student, per year basis. This means, for example, that you could claim the American Opportunity Credit for one student and the Lifetime Learning Credit for another student in the same year. Expenses that qualify for the Lifetime Learning Credit. For purposes of the Lifetime Learning Credit, qualified expenses include tuition and certain related expenses required for enrollment in a course at an eligible educational institution, and the course must be part of a post-secondary degree program or taken by the student to acquire or improve job skills. Eligible student for purposes of claiming the Lifetime Credit. Well, for purposes of the credit, an eligible student is a student who is enrolled in one or more courses at an eligible educational institution. And again, from Publication 570, we have another table. This one is Table 3.1. The maximum credit for the lifetime learning credit is $2,000 per tax return. Let's compare that with the American Opportunity Credit, where the credit is $2,500 per student. The limit on the modified adjusted gross income is $120,000 for joint filers, $60,000 for single filers. Is the credit refundable or non-refundable? It is a fully non-refundable credit. It cannot be more than the amount of tax, and if it is more than your tax, you lose the benefit of the excess. Number of years of post-secondary education. This credit is available for all years of post-secondary education and for courses to acquire or improve job skills. Number of tax years that the credit is available. It is available for an unlimited number of years. Type of degree required. The student does not need to be pursuing a degree or other recognized educational credential. Number of courses. It's available if you are taking one or more courses. Felony drug conviction. Well, that doesn't matter. You can have a felony drug conviction and still qualify for this credit. Qualified expenses. Tuition and fees required for enrollment, including amounts required to be paid to the institution for course-related books, supplies, and equipment. Payments for academic periods are allowed if the payments are for periods that begin in 2010 or in the first 3 months of 2011. So let's take a look at the rules as they apply to both credits. Firstly, filing status. You cannot claim an education credit if your filing status is married filing separate. You may claim qualified education expenses that you paid for yourself, your spouse, or your dependent for whom you claim an exemption on your tax return. What expenses qualify for the credits? Well, qualified expenses include the qualified tuition and related expenses required to be paid as a condition of enrollment and fees required for enrollment. For the American Opportunity Credit only, you can also claim expenses that you paid for books, supplies, and equipment needed for a course of study that are included in qualified education expenses, whether or not these materials are purchased from the educational institution. So what that means is, let's just suppose you enroll in a course at college, and you get the reading assignments from that college, and they include that you need to go out and purchase various supplies and a couple of textbooks. Well, for the American Opportunity Credit, you would be allowed to add those costs to your tuition and fees costs and be able to claim a credit against them. But for the Lifetime Learning Credit, you would not. In order to claim the cost of books as a credit for the Lifetime Learning Credit, you must be required to purchase those books or materials directly from the institution as a condition of enrolling in that course. So essentially, let's just suppose you paid $500 to take a course, and the course comes with $100 textbooks that is included in that price. Then you would be allowed to cost because it was part of the cost of the tuition. But if it is not required to be purchased directly from the school as a condition of enrollment, you cannot claim the cost for the Lifetime Learning Credit, but you can claim it if you are claiming the American Opportunity Credit. So what expenses do not qualify for either of the credits? Well, expenses that do not qualify for either credit include insurance, medical expenses, room and board, transportation, personal living or family expenses. Even if you must pay these expenses as a condition of enrollment, you cannot claim an educational credit for any portion of student expenses that were paid through scholarships, Pell Grants, employer-provided educational assistance, or any other non-taxable payments. Also, any expense for which a deduction is taken under Code Section 162 or any other provision of the Internal Revenue Code. Essentially, this means you cannot claim a credit for expenses that you claimed as an itemized deduction on Schedule A. Well, this class is, of course, not about itemized deductions, but just to help you understand this concept, it is possible under the rules for itemizing deductions in certain situations to claim education expenses as a deduction. If you claim education expenses as a deduction on Schedule A, you cannot turn around and use those same expenses to qualify for the Hooper Lifetime Learning Credits, and that certainly makes sense. The other provision that it is referring to is the tuition and fees deduction, which is claimed as an adjustment to income on the front of Form 1040. If you claim an adjustment to income for the tuition and fees deduction for a particular student, you cannot turn around and use those same expenses or use that same student to claim either of the education credits. So who can claim the credits? You can claim qualified expenses paid directly by you or by someone else on your behalf. Expenses paid directly to the institution by someone else on your behalf are considered to have been paid by you. If you claim an exemption deduction for your child, education expenses paid for by your child or by another person for your child shall be considered to have been paid by you. If you are claimed as a dependent on another person's return, the expenses can only be claimed on the return of the person who claims you as a dependent. So if a parent claims an exemption for his or her child, then the child's education credit is claimed on the parent's tax return, and the child cannot claim the credit himself. A dependent can claim an education credit provided his or her exemption is not claimed on another person's return. This means that if a parent chooses not to claim a dependency exemption for a child, then the child can claim the education credit on his or her return. But this does not mean that the child is also allowed to claim their own exemption deduction. What it means is the parent gives up the exemption deduction for that child and does not claim that child or that child's exemption deduction on his or her return. The child then turns around and claims an education credit and does not claim the exemption deduction either. So in effect, nobody claims that child's exemption deduction for the year, but in exchange, the child could claim his or her own education credit. Now, why would a dependent or a family want to do that? Well, let's just suppose you are an American family and your joint income on your married filing joint tax return is $200,000 for the year, and you have two dependents, one of whom is going to college. Well, at $200,000 of income, you earn too much. You're not going to be allowed to claim the American Opportunity Credit. At $200,000 of income, you may have some limits on your ability to even benefit from the exemption deductions because of the alternative minimum tax. Perhaps you benefit, perhaps you're not benefiting from that deduction. But you make a decision to let your child claim the education credit on their own return because you cannot benefit from claiming it on your return. So you tell your child, I am not going to claim your dependency exemption. Your child files his or her own tax return and claims the American Opportunity Credit, but they are not allowed to claim their own exemption deduction while they're at it. Also, if there are qualified education expenses for your dependent during a tax year, either you or your dependent, but not both of you, can claim an education credit for your dependent's expenses during that year. So, of course, if you give up your dependent's exemption, then your child will claim his or her expenses on his return. If you do not give up your child's deduction and do claim your child as a dependent on your return, then you will claim your child's education expenses as a credit on your return, if you qualify to claim the credit. Also, you can claim an educational credit for expenses you paid with a student loan or other loan. The credit is claimed for the year in which the expenses are paid and not the year in which payments on the loan are made. Now, this is a really good example of a situation where tax preparers should put careful thought in how they interview tax clients. Because a tax client does not understand tax law. That's why they're coming to a professional tax preparer to get their return prepared. So the tax preparer needs to be aware of the line of reasoning and thinking that may be going on in the mind of the client. For example, if I ask my client, did you have any educational expenses during the year? My client may think to himself, well, no, I didn't have any expenses because all of the expenses were paid with student loans. But the client doesn't say that to me. The client just says, no, I didn't have any expenses. Well, when an interview goes like that, it means I, as a tax preparer, have not done a very good job in the interview because there's an expense there, and I asked a question, but my client didn't reveal it to me, and I've missed out on saving the money. So since I know my clients might reason their way through questions and not answer them correctly, I have to think about another way I can ask a question that is as important as this one and get the message across better. So instead of asking, did you have educational expenses during the year, I ask, were you a student during the year? Or were any of your children in college for the year? Those are the questions I ask. Because if they answer, yes, I was a student or one of my children was a student, then the next question could be, okay, where were you going to school? What was the tuition and fees expenses for the year? Who paid them? And carry it on from there and use that information to actually determine whether or not they meet the requirements for claiming an education credit. So who cannot claim the credits? Well, you cannot claim either credit if your filing status is married filing separate, or you are listed as a dependent on another person's tax return, or your modified adjusted gross income is $60,000 or more, or $120,000 for the lifetime learning credit, or $90,000 or more, or $180,000 or more if filing joint for the American Opportunity Credit. You or your spouse were non-resident aliens for any part of 2010, and the non-resident alien did not elect to be treated as a resident alien for tax purposes. Or you claim a tuition and fees deduction for the same student. Also, you cannot claim the credit in the same year that you took money tax-free from an education IRA. Today's class is not about education IRAs, but if you do have an education IRA, you are allowed to have money invested in that IRA and have that IRA grow tax-free over time. If during the year you decide to send your child to college and you take money from their educational IRA account to pay for college, you cannot take money from that account tax-free and then also claim a credit using the same funds. So when must tuition be paid? Generally, you can only claim a credit for tuition paid for an academic period that begins in the same calendar year. However, if you paid qualifying expenses in the last quarter of 2010 for an academic period that begins in the first 3 months of 2011, you can claim those expenses on your 2010 return. Income levels at which the credits phase out. Your education credit will phase out if your modified adjusted gross income is $50,000 to $60,000 or $100,000 to $120,000 on a joint return for the lifetime learning credit. Phase out is $80,000 to $90,000 for the American Opportunity Credit and $160,000 to $180,000 if you are filing jointly. So what does modified adjusted gross income mean? Well, let's go back to the 1040 form. Remember I told you that adjusted gross income is a term you needed to pay attention to? Adjusted gross income appears on line 37 of Form 1040. And for purposes of determining your income for these phase amounts for the lifetime learning and the American Opportunity Credits, your modified adjusted gross income is the same as your adjusted gross income unless you elected to exclude foreign earned income from your income. And of course, that would affect a small number of filers. Educational institutions that qualify for the credits, you must attend an eligible institution. An eligible institution will generally qualify for financial aid. Most universities, colleges, and private vocational schools offering certificates of completion will qualify. No double benefit allowed. You cannot do any of the following. Deduct higher education expenses on your income tax return, for example, as a business expense or as a tuition and fees deduction, and then also claim an education credit using those same expenses. Or claim an educational credit for expenses paid with tax-free scholarships, Pell Grants, employer-provided educational assistance, or any other tax-free educational assistance. So what this is saying is that if you use a student loan to pay for college expenses, it's okay to claim the credit because you have to pay back the student loan. But if your educational expenses were paid with a Pell Grant or a scholarship or through your employer, then those are expenses you are not responsible for repaying, and therefore you are not eligible to claim an education credit paid for through those programs. Refundable part of the American Opportunity Credit. 40% of the American Opportunity Credit is refundable for most taxpayers. However, you cannot claim any part of the American Opportunity Credit as a refundable credit if you were under age 24 at the end of 2010 and the following apply to you. Number one, you were age 18 at the end of 2010, or you were age 18 at the end of 2010 and your earned income, which we will define in a minute, was less than 1/2 of your support. Or you were a full-time student over age 18 and under age 24 at the end of 2010 and your earned income was less than 1/2 of your support. And at least one of your parents was alive at the end of 2010 and you were filing a return as a single, head of household, qualifying widower, or married filing separate filer for 2010. So what does earned income mean? Earned income examples are wages, salaries, tips, and other taxable employee pay, net earnings from self-employment, and gross income received as a statutory employee. The best way to think of earned income is you earned it. You went out and you worked, and you got paid for it. That's the definition of earned income. If you are under age 18 at the end of the year, you cannot claim the refundable part of the American Opportunity Credit. But even if you are age 18, if you had earned income that paid less than half of your support, or you had no earned income at all, then you cannot claim the refundable portion of the credit if either of your parents are alive. Support. Your support includes all amounts spent to provide you with food, lodging, clothing, education, medical and dental care, recreation, transportation, and similar necessities. To figure your support, count support that was provided by you, your parents, and others. However, a scholarship received by you is not considered support if you are a full-time student. So essentially, in a nutshell, what's going on is, let's suppose we got mom and dad earning $200,000 a year. They earn too much to claim the American Opportunity Credit. And they're looking at Junior here who's going to college, and they say, hey, Junior, we're not going to claim you as a dependent on our tax return so that you can go ahead and file your own tax return and you can claim the education credit. The IRS is saying that's okay for the non-refundable portion of the credit. But to claim the refundable portion of the credit, Junior would need to show that he used his own earned income to provide support and that it was more than half of his support. If he cannot show that his own income paid for more than half of his own support, he cannot claim the refundable portion of the American Opportunity Credit. So let's look at a comparison of the two education credits. I've got some tables in here on the next few pages that come from publication 970. They cover far more than the two education credits that I've been discussing with you today. So I'm not going to go through every detail of the tables, but you might find them interesting to peruse on your own. For now, I will point out the two columns we are interested in. We have the American Opportunity Credit column and the Lifetime Learning Credit column. And what these two columns do is a very nice job of aligning the two credits up and comparing them. Over here we have the tuition and fees deduction, and I haven't really explained the rules for the tuition and fees deduction to you today, except to say that you cannot claim the tuition and fees deduction for the same student that you use to claim either the Lifetime Learning Credit or the American Opportunity Credit. So this is another column that you can use to compare. But today, for this lecture, I'm just going to be comparing these two columns. So firstly, for the American Opportunity Credit, what is your benefit? Well, 40% of the credit may be refundable, limited to $1,000. Under the Lifetime Learning Credit, the credit can reduce your tax, but it does not generate a refund that is greater than your tax. What is the annual limit? $2,500 of credit per student for American Opportunity Credit, a total maximum credit of $2,000 per tax return for the Lifetime Learning Credit. What expenses qualify besides tuition and required enrollment fees? Well, for the American Opportunity Credit, you can claim course-related books, supplies, and equipment, and for the Lifetime Learning Credit, there are no additional costs allowed. What education qualifies? For the American Opportunity Credit, the first 4 years of undergraduate education qualify. For the Lifetime Learning Credit, undergraduate and graduate courses qualify, as well as courses used to acquire or improve job skills. For the American Opportunity Credit, what are some other conditions that apply? Well, the American Opportunity Credit can be claimed only for 4 tax years, including any year the HOPE credit was claimed. You must be enrolled at least half-time in a degree program, and you cannot have a felony drug conviction. For the Lifetime Learning Credit, those restrictions do not apply. What are the phase-out ranges? Well, we've said several times already, 80 to 90 or 160 to 180 for the American Opportunity Credit, 50 to 60 for the Lifetime Learning Credit, and joint filers are 100 to 120. On the next page, we have highlights of other education benefits that are available. They are not a part of today's class, but they are interesting and relevant overall for students, so I've included that table in there for you to read on your own. Now let's move on now to a discussion of how to claim the credits. To claim any education credit, you must complete Form 8863 for each eligible student. You claim the Lifetime Learning Credit by completing Parts 2 and 4 of Form 8863 and entering the credit calculated on Form 1040, line 49, or on Form 1040A, line 31. Now, for purposes of today's class, and actually any class we teach, we would ask that you complete all course assignments using the long Form 1040. Do not use short Form 1040A because your line numbers and line entry amounts will differ from ours. So anytime you take one of our courses, please do use the long Form 1040 and avoid the short form. You enter the non-refundable part of the credit on line 49 of Form 1040. And, of course, that is shown on page 2 of the Form 1040 right here. Let's take a look at Part 1 of Form 8863. You use Part 1 to enter information for each person for whom you are claiming the American Opportunity Credit. The credit is 100% of the first $2,000 of expenses and 25% of the second $2,000 of expenses. The maximum credit per student is $2,500. You may not claim the American Opportunity Credit for any student listed in Part 2 of Form 8863 or for whom you claimed a tuition and fees deduction on Form 1040, line 34. Use Part 2 of Form 8863 to enter information for each person for whom you are claiming the Lifetime Learning Credit. The Lifetime Learning Credit is 20% of the first $10,000 of qualifying expense. You may not claim the Lifetime Learning Credit for any student listed in Part 1 of Form 8863 or for whom you claim a tuition and fees deduction on Form 1040, line 34. Part 3 of Form 8863, you use this part to figure the amount of the refundable portion of the American Opportunity Credit that is entered on Form 1040, line 66. Right there. And you use Part 4 to figure the amount of non-refundable education credit, including the amount of American Opportunity and Lifetime Learning Credits to enter on Form 1040, line 49. The amount of American Opportunity Credit is entered on line 15 of the form, and the amount of Lifetime Learning Credit is entered on line 22 of the form. You figure the Lifetime Learning Credit on line 16 through 21. You total the Lifetime Learning Credit on line 22. You add it to the non-refundable portion of the American Opportunity Credit shown on line 15, and the total credit shown on line 23 carries to the Form 1040 and is entered on line 49. So that concludes the lecture portion of today's class. It's time for you as a student to start working. I always believe that students learn more by doing than they do by listening and reading. And so I'm giving you a classwork assignment today to apply the concepts discussed in today's class. Bob and Amy Heron live in Lincoln, Nebraska, and Bob is a manager and Amy is a clerk. The Herons have one child whom they claim as a dependent named Jessica, born in 1991. Jessica is a full-time student at her local state university. The Herons paid $5,600 in qualifying tuition expenses for Jessica. The Herons will take the standard deduction and claim a Making Work Pay credit in the amount of $800. Their W-2s are attached. Tax tables from Pub 17 are included in the manual here for reference in completing this assignment. Please prepare Form 1040 and 8863 for the Herons. Now here is a W-2 for Bob Heron. Here is Amy Heron's W-2. And if we continue on to the next page, I have cut and pasted a page from the IRS tax tables so that you can use this in determining the amount of tax to calculate for the Herons and enter that tax amount on line 44 of their return. So at this point, what I'd ask you to do is to push pause on the video playback. Please prepare Form 1040 and 8863 for the Herons. When you are finished with preparing their tax returns, please resume video playback. I will show you the answer key for the Herons. So I have up in front of you now the answer key for Bob and Amy Heron. They are going to be filing a joint return. Today's class was not about the child tax credit, but in case you were wondering, Jessica does not qualify for that child tax credit, so that's not a credit that is figured anywhere on the form. I've given you some line entries for the 1040, but rather than read those to you, I will take you and show you the finished Form 1040 that I prepared. Also, for purposes of calculating the education credit, Bob and Amy are eligible for the American Opportunity Credit because their daughter is enrolled in the first 4 years of a degree program and was at least a half-time student. They are going to complete Part 1 of Form 8863 by entering Jessica's name, Social Security number, and qualifying expense amounts. Bob and Amy are also eligible to claim the Lifetime Learning Credit, but because they are better off with the American Opportunity Credit, we're going to leave Part 2 of Form 8863 blank. Part 3 of the form is used to determine if Bob and Amy's credit will be limited by their income and what portion of the education credit is refundable. Bob and Amy's income is less than $180,000, so their credit is not limited by their income. And here is their finished Form 1040. We can see that Bob and Amy are filing a joint return. They've checked box 2 for married filing joint filing status. On line 6, there's an exemption check for Bob. On line 6B, there's an exemption check for the spouse Amy. And then under dependents, we have listed Jessica Heron. The total number of exemptions claimed is 3. That means the exemption deduction will be $3,650 times 3. We added up the total amount of income shown in box 1 of the W-2s. That's $98,100. The Herons have no adjustments to income, so their adjusted gross income and their gross income is the same number. We continue on page 2 with the adjusted gross income of $98,100. We enter a standard deduction for a married filing joint couple of $11,400. We subtract that number out from their adjusted gross income and get $86,700. Next, we take 3 times $3,650. That equals $10,950 of exemption deduction, and we enter that on line 42. We do another subtraction, and we get taxable income of $75,750. We go to the tax table and determine that the tax on that amount of income is $11,306. What is the credit that we get to claim? Well, the American Opportunity Credit is the credit we're claiming. Let's go figure that. Here is the 8863 form for the Herons. Bob and Amy are the filers. Jessica is the person for whom the credit is being claimed. Her expenses were $5,600, but you do not enter more than $4,000 on the form. So we enter $4,000 in column C. We subtract $2,000 out, and we then multiply $2,000 by 25% to get $500. We add C to E and get a credit amount of $2,500. In Part 3 and 4 of the form, we figure the amount of refundable and non-refundable credit that the Herons can claim. Lines 8 through 11 are used to determine whether or not a phase-out will affect their credit, and there is no phase-out of their credit, so they're allowed 100% of their full credit. And their full credit is $2,500. We then multiply $2,500 by 40%. The total is $1,000, and that is the refundable portion of their credit. We then subtract line 14 from line 13, and we get $1,500. $1,500 is the non-refundable portion of their credit, and that will carry to Form 1040 and get entered on line 49. So let's go back up to the Herons Form 1040. Here we are, line 49. We can see we have $1,500 entered. The $1,500 is the total credit they're allowed to claim. We subtract that from their tax of $11,306. The total is $9,806 of net tax. Now it's time to look at their withholdings. The W-2s had $9,000 of withholdings showing in box 2. And we enter that amount of withholding on line 61. They are eligible for an $800 making work pay credit. We entered that on line 63. And the refundable portion of the American Opportunity Credit is entered on line 66. Total credits are $10,800. That is more than their tax bill shown on line 60. They end up with a refund of $994. Now, I did tell you that during today's class that I would be giving you a couple of passwords and that you needed to stay tuned for those. Well, the first password of the day is the password that you will use to unlock the classwork answer key that I just showed you. The password is Bighorn, and that's BIGHORN. So let's navigate now to the Learning Management System so I can show you how to access and open that answer key. Here we are on the landing page for the Learning Management System. I'm going to go over to the Answer Key tab, click on the folder at the bottom, click on the Classwork Answer Key link. It asks me to enter a password, and I will enter Bighorn. I click OK, and there the answer key has opened, just as promised. There are other tests that I need you to complete, but let's show that we completed our classwork assignment. So I've had you do the classwork assignment on paper, but it is now time to go to the LMS and enter the answers that appeared on your answer key into the LMS. So here I have the classwork test and my finished tax return for my classwork assignment in front of me at the same time. The LMS test is asking me to enter line amounts from my finished classwork assignment. The first question it asks is, what is the amount that you entered on Form 1040, line 6D? Well, line 6D is 3 exemptions, so I'm going to enter 3 into the LMS. It then asks me, what is the amount that you entered on Form 1040, line 73? So I'm going to scroll down to page 2 of Form 1040. What is the amount that I entered on line 73? Well, that was $994. So I enter $994. Next it asks me, what is the amount that you entered on Form 8863, line 1C? I scroll over to 8863. Where's line 1C? Here it is, $4,000. So I enter $4,000. Next it says, what is the amount that you entered on Form 8863, line 1F? Let's find line 1F. Line 1F is $2,500. What is the amount that you entered on Form 8863, line 23? So I'll flip over to page 2. Line 23 is $1,500, and I will enter that amount. Now you will notice that I did not enter cents or dollar signs or even commas in my answers. And it is preferable for purposes of the LMS that you do not even enter commas. However, you could have entered 4,000 right here, and that would still be accepted as correct. But if you were to enter 4,000 with a dollar sign, or you were to enter a decimal with cents, the LMS would score this question incorrect, even though technically the answer is correct. And I'm going to show you what I mean by submitting all and finishing. The LMS has graded me, and the question I got wrong is question number 3. It is not because I have the wrong answer. It is because I formatted it incorrectly. And if I had formatted it correctly, I would have gotten 100% on this particular test. Now, I do need a passing score of 70% or higher to pass this test, and I did achieve a score of 80%. So even though I know I got this one wrong, I am technically finished with the test, and I can move on. I'm going to go now and take the quiz test. The quiz test is a multiple choice true-false type format. And at this point, I would like you to go to the LMS and take the quiz. You can see the questions that are entered. There are a total of 6 quiz questions. Please push pause at this point, go to the LMS, and take your quiz. When you have finished taking your quiz, please resume video playback for a review of the answer key to the quiz. So I have up in front of you now the quiz for the free sample course. And if you would like to unlock the answer key for this particular quiz assignment, the password to do so is Rocky, R-O-C-K-Y. Let's go through the quiz questions together. Number 1, a student who is on full scholarship cannot generally claim an education credit. That is a true statement. If you are on a full scholarship, it would mean you do not have educational expenses, so you couldn't claim a credit. Number 2, to qualify for the lifetime learning credit, a student must be enrolled at least half-time for 1 academic period during the year. No, that rule applies to the American Opportunity Credit, but not to the lifetime learning credit. You must be at least part-time for 1 academic period during the year. That is not a requirement. At least full-time for 1 academic period during the year. That also is not a requirement. Or D, there is no specific academic requirement for the lifetime learning credit so long as the student attends a qualified school. D is the correct answer. Number 3, the maximum lifetime learning credit you can claim is $2,000 per eligible student that you claim on your return. That is false. The maximum lifetime learning credit you can claim is $2,000 per year, regardless of the number of students. Number 4, the American Opportunity Credit and the blank may be claimed by a filer in the same year. So the question is, can I claim the lifetime learning credit or the tuition and fees deduction in the same year that I claim the American Opportunity Credit? Well, the answer is yes. I can actually claim both of those. I can claim all 3 of those different tax benefits in the same year on the same return, so long as I am not claiming them for the same student. In other words, to claim all 3 of these benefits on the same return, I would have to have 3 students who were going to school, taking higher education classes. Number 5, Mike is in his freshman year as a college student at UCLA. His parents, Todd and Tara, will claim him as a dependent on their return. Todd and Tara have no dependents. Which of the following statements is not true? Number A, Todd and Tara can claim the American Opportunity Credit and the tuition and fees deduction for Mike's expenses. I don't think so. B, the cost of Mike's college textbooks can be deducted if Todd and Tara claim the American Opportunity Credit. Absolutely, that is true. And C, Todd and Tara can claim the lifetime learning credit for Mike's qualified education expenses. Well, that's true too. So the question, though, is which statement is not true? Which one is not true? Number A. So that is the correct answer. And finally, number 6, which of the following statements is true? The American Opportunity Credit is 100% of the first $4,000 of expenses? No. It's 100% of the first $2,000 expenses and 25% of the second $2,000 of expenses. B, the lifetime learning credit is 20% of the first $2,000 of expenses. That too is false. It is 20% of the first $10,000 of expenses. And C, with 3 qualifying students on your return, you could potentially claim a combined American Opportunity credit of $7,500. If each qualifying student had $4,000 or more of expenses, that is true. So if you would like to go again and open up the answer key to read more detailed explanations, you can do so. The password to open the key is Rocky. So again, you would go back to the LMS, you would click on the Answer Keys tab, you would go to the folder at the bottom of the page, click on the folder, and then click on Quiz Answer Key. Type in the password Rocky, and the key will open. We are almost at the end of today's class. You as a student have one more assignment left to do, and you have to do this assignment on your own. I'm not going to give you the answer key and tell you how to get the correct answers. This is one you're going to have to figure out for yourself, but by now I have taught you enough that you should do splendidly at it. The forms needed to complete this assignment are 1040 and Form 8863. Mary Contrary is single and lives in Topeka, Kansas. During the year, she was a half-time student at Washburn University, where she is enrolled in a degree program and is in her sophomore year. Her Form 1098-T shows that her tuition and qualified expenses for the year were $2,000. This is Mary's first college experience. Mary used money from her student loans to pay the tuition, so her expenses were not out of pocket. Her W-2 is attached. Her Making Work Pay credit is $400. Prepare Forms 1040 and 8863 for Mary. And just for your reference, here is her W-2. And then on the next page, I have cut out the tax table that you would need to reference in figuring Mary's tax. So at this point, we are at the end of our lecture, but I did want to show you a couple of things before we sign off. Going back out to the LMS, I did want to take you to the completion certificate page just so I could show you how to print your certificate of completion. We click on the link, and it says you must first meet all course activity grade requirements before you receive your certificate. I click continue, and I can't continue, and the reason is that I have not yet taken the password test. So I need to go down and take the password test. I need to enter both the passwords that I gave you today. The first question is, what is the password to unlock the classwork answer key? And that password was Bighorn. And then it says, what was the password for the quiz answer key? That password is Rocky. So I've now successfully completed that test. If you would like to be able to check on your grades for all tests simultaneously, you can do so by clicking on the grades box. Here you can see that I have passed all of the tests, 80% on classwork, 100% on all other tests. I am ready to print my certificate of completion now. So I go to the Completion Certificate tab, click on the Completion Certificate, and now I can open the certificate. You can't see it on the screen. I'm hiding it from you, but there is a password right down here in the bottom left-hand corner of the certificate. That is the password that you will use to unlock the homework answer key for Mary Contrary. If you'd like to see how you did, you will be able to do so. The passing score for homework, classwork, and quiz assignments is 70%, so you do not need to get 100% on your homework assignment to be able to print your certificate. As long as you get 70% or higher, you will be able to print your certificate, and at that point you can print your at that point you can get the password to unlock the answer key to see how you did. So this completes the free sample course. Thank you for participating in our training program. We hope to see you in either our continuing education programs or our basic tax courses soon. Bye-bye.